Yes, sometimes I did have into the
Okay.
live option.
Okay.
Yeah.
ठीक है. Thanks. Good morning, everyone. This is Rashmi Shah from Simplicity Investing. Uh, those who are watching live, thank you for joining, and those who would be watching later on, hello from Rashmi Shah. It's a long time after which I'm coming on a live webinar. One of the key reasons I don't want to do this very frequently because then it's just pushing and selling and all that kind of stuff. I want to be very discreet in use of YouTube webinars. Do it only when it's absolutely necessary because there is too much information and too much data floating everywhere, and it creates a lot of confusion. And I don't want to add more to the confusion. I just want to be very discreet in sharing the information as absolutely when it's required, correct? And now I think it's a high time. I'm coming after 6 months and would like to share what exactly is happening in the market and what I see forward and going forward, correct? So, as a disclaimer here, this webinar is only for people living in India. Anybody who's from North America, Canada, or US, we are not marketing any advice investment services there. This is only for people residing in India. Second, if you have any questions, please put on the chat box. After I finish my talk within 20 or 30 minutes, I'll answer those questions. And I also would like you to subscribe to our channel so we can keep you posted and you can get the information as and when needed. Thank you very much. And with that, I'll start the webinar. Now, market update, correct? So, what exactly is happening in the financial market? So, as we all know, the prices, financial asset prices, are a direct function of three things. Nothing one thing drives the stock market price. It depends on three things. First, the global macro, which has almost 40% weight, influences on the price of an asset. Then India macro, which is another 30% weight, and the sector macro and a company fundamentals. So that carries 30% weight. So for any stock or any security or any sector to do well, the global macro has a direct influence, 40%. 30% is the India macro, 30%, and then the sector and the company macro, 30%. So that's how the markets work, correct? So currently the global macros are in the recovery mode. So the global macros were very bad last year. Um, I'm going to talk about that. Last year they were very bad in the sense the Ukraine-Russia was surprised everyone, and they expected the war to get over in a week. It's still going on. It disrupted supply chain worldwide, and it destabilized the businesses worldwide. And that was the second thing was high inflation rate in US and surprising 300% increase in the Fed interest rates in a very fast. It's the fastest increase in interest rates in the history of U.S. So they have never seen that kind of, and people didn't get time to readjust their loans and businesses, and that affected the stock market there, and that created a cascading impact on the global market. So the global macros were bad for that to account. Now, uh, India macros, though they were very good, India fundamentally benefited from the global turmoil, but foreign investments were flowing, and that liquidity stabilized. So Indian stock markets were flat. They were negative for the most part of the year, and in the end it recovered. But they were flat, correct? But India macro is, I'll share down the line. Then the sector macro and company macros. Every sector goes to different phases, so I'm going to talk about that in this webinar. Okay, and feel free to ask questions. Now, if you look at your portfolio performance, now I talked about the stock market performance depends on three factors. Same way, your portfolio performance depends also on three factors. So you also play a very important role in how your portfolio performs. So that two first thing is what is your capacity to take risk, what is your capacity to manage risk, and ability to follow the process. These three factors determine how your portfolio performance depends 75% on you and 25% on the market. So 75% is you and 25% is the market. Now I'll give an example, capacity to take risk. So if I'm 30 years old and I have only 50,000 savings, my capacity to take risk is very low. But if I am 30 years old and I have 2 crores savings, my capacity to risk is higher. So your capacity to take risk depends on how much savings you have. Are you covered by your emergency fund, your family needs? So that assessment we do, and that's the capacity to take risk. Now, if your capacity to risk is less, you should not invest in stock market heavily. You should first put in fixed deposits and create a base. Now, if you have, but let's say if you have a fixed deposit of 3 crores, you have 3 properties, you have regular income, your capacity to risk is higher. You should invest in stock market, correct? So this is one. Number two, capacity to manage risk. Now, this is a different thing than capacity to take risk. Now, let's say you invested 50,000 today, and if tomorrow that 50,000 becomes 49,000 and you can't get sleep in the night, though your net worth is 10 crores and you invested only 50,000 and it affects you, that is your capacity to manage risk. You are a very fearful person if markets go down. So that also impacts your portfolio. Now, so that we make an assessment. How often you review your statements. If you look at your portfolio statements every day, and you won't make money in the market. Yeah. Now, in stock market, you need to invest and just forget it for 5 years. That is, your capacity to manage risk is very good, correct? Now, so that also determines how you're going to make money in the long term, and ability to follow a process. Now, so I'll give you a simple example. Like compare this to ability to live a healthy life. If you go for a walk only after you get a heart attack, you are not following the process. But if you're going for a morning walk every day, whether you have no health issues, but you still go for a walk every day, and that's called you're following the process. So your longevity is going to be good. Same way, in which direction market goes up or down, you don't care, but you keep on investing every month after month. You're following the process. Your returns will be very good over a longer period of time. So these three things determine how your portfolio is going to perform. Correct? You try to reshuffle your portfolio every 6 months. Bad practice. You're not following the process. You need to have a very sound, logical mind with a long-term perspective. Then you can make good money. So this is what your portfolio performance directly relates to how you behave. So these are two parts. So one is the market behavior, one is your behavior. Now I'm going to talk about the market, correct? What's happening in the market. Now, if you look at last 3 years, have been the most weird years in last 100 years, because we saw COVID and then we saw Russia-Ukraine war, which everybody expected to get over in a week. It's still going on for after 1 year. Supply chain disruptions, maximum printing of money, and you see how it went through, correct? So every country behaved differently. Small countries which didn't have good balance sheet, they went bankrupt. You know what happened in Pakistan, you know what happened in Sri Lanka. Now you see a country like Turkey is also facing 50% inflation. So any company which didn't have a healthy balance sheet, just like they said in COVID, if you didn't have a healthy body, COVID was affecting you more. Those people affecting more, correct? Those who had diabetes, those who had blood pressure, the COVID impacted them more than the healthy person. Same way, last 3 years, any economy which was weak, their balance sheets were weak, politicians were weak, they got killed in that market. Now, if you see every country, different things, this is the first time after a long time when you see every country took a different path in this crisis. Number two is again different between number two is recession fear in the United States and inflation, correct? All those kind of different things. And Ukraine war got impacted in countries like France, Germany, but Ukraine war has not affected that much. Yeah, affected that much. COVID is the least concern in countries like India and US. But COVID is the most important concern in China. So every country has a different problem, different issues, correct? Now, if you take smaller countries like Pakistan, Sri Lanka, total mess, correct? Total mess. They totally got caught in the storm. So India, fortunately, has a very strong government, has a very strong balance sheet, and it benefited from all this crisis. But its stock prices didn't go up. The reason it didn't go up because of the global issues. India, but economy-wise, it did reasonably well, and we are going to see the impact of that the coming year. Now, that is the status as of today. Correct. Now, I'm going to share how different countries' portfolio perform differently during this period. So here I'm taking the performance of the market 1 month before Ukraine war and 1 month before interest rates started to go up in US. So if somebody invested in January or February of 2022, 100 rupees, somebody invested 100 rupees. So Nifty gave 3% return. Nifty outperformed everyone. If somebody invested in January or February, not a very good performance, but it don't lose money. From that day till today, Nifty has given 3% return. But if you look at Russia, it is given minus 33. You look at, so if you had invested 100 rupees in Russia, it has become, this is all in converted into one currency, dollar, correct? This performance in one currency, correct? So Russia has become minus 67. Nasdaq has minus 80, correct? It has become $100 has become 80. China has become $100 is 85. India $100 has become 103. So what I mean when I go to the next chart, you see the next chart. If somebody invested 6 months before Ukraine war, so September of 1st of 2021, the picture is again different, correct? India is still 5% up, but Nikkei is 3% up. But you see Russia, it is minus 35. You see that chart, it has crashed like anything in countries, different patterns you see that. Now why I'm showing you this, your stock prices, your portfolios, and your companies which are doing businesses, they all get impacted by this. They all get, so we are living in a global economy. Even your monthly spending, you buy products from all these countries. We buy products from everything, correct? So Microsoft, Google, Apple, we buy American products. Oil we buy from Middle East, correct, and Russia. You buy products, so many products from China, Japan. So everything is interconnected. So investments also interconnected, and that's very important to understand what's happening. Now I go to the third chart. If you look at the third chart, 6 months after Ukraine, 1 year from today, if you look at that, the best performing market is Nikkei. Nikkei is the best performing market. Then Russia is second best performing market. India is third best performing market. Russia should have been, after Ukraine war, it was the worst performing market. But after 6 months, it has stabilized. And today, if you compare last 1 year, Russia is given better return than India. So, isn't it surprising? So how markets work? And Hang Seng is still not recovered. S&P, Dow Jones, and Nasdaq up flat on last 1 year purposes. Now let's go to the fourth chart. If you go at the fourth chart, market from January 1st, 2023. If you see market from first this year, 2023, India is in the bottom part, one of the worst performing market, correct? What is the best performing market? Nasdaq 22% up, Russia 18% up, Nikkei 13% up, S&P 500 7% up. So we have been telling most of our clients for last 3 months that invest in US and when the markets were low, and they will be the first to bounce back, correct? And they have bounced back, and so the recovery mode has already started. So what it shows you, the recovery has started in the global market. It is in spite of the Ukraine-Russia war still going on, in spite of elections going to be there next year in the US. So markets are already discounting all those bad news, and they have started recovering. So the first market fell in US, and the first to recover is also the US. So that's a very good sign. That's a very good sign, correct? Now India didn't fall that much, so India didn't recover also that much, correct? So you can see that pattern here. So that now I'll show you the next chart. If somebody had invested in 2008-9, correct? I'm taking this chart from 2010. On the left side, January 1st, 2011, you see this? If somebody had invested in 2011 $100 in all these countries, which is the best performing market today, you see again Nasdaq. So that time they approached me that being a chartered accountant, if I can. So I started doing road shows in Bombay, Pune, and NAV of 21 rupees. If somebody invested, those many of my clients invested, I invested. Today is 2,200. So it has given compounded 21% return. It is now, but how many investors are still invested, including me? I'm not in. I took out my money when it went from 21 to 400 rupees. All my money I took out. I think this is money multiplied by 20 times. I took the money out. Stupid mistake. Many investors did that. Some people, investors of mine who forgot about they had this investment, they made real money because they were not aware that money was invested. So what it tells you is long term. And even Nifty has given 14% return, but this fund has given 21% return. But did it give year after year 21%? No, it has given compounded. For 5 years in between two times, it was flat. And when it was not moving for 5 years, all investors took out that money. This is how the stock market, you need to be patient. And this is where mistakes make. I purposely wanted to show you this chart. You need to look at long term, short term, medium term, look at all this and build a long term strategy. So here you see the impact of COVID, you see impact of this, still you made money, correct? Now I'm coming now to the next part of the. So what is the current situation today? Ukraine war. Market has already discounted all the risk of Ukraine war. Ukraine, everyone is tired of the long war. Nobody expected it more than 1 week. It has lasted more than 15 months. It has become like Iran war in 1980s. It lasted for 8 years, and both the sides are tired of the war. They want to stop it, but their egos are not allowing them to stop it. Correct? And the risk of that war has on the financial market has come down. It's not there as of today. Let the fighting go on, but the risk premium or the panic which was there, it's gone. Every business, every institution has now put proper process in place to hedge against the risk. So it's no longer unknown risk. Inflation which was going up last year in US above in double digit has now come in single digit and it's stabilized. Same thing in yesterday, if you see the news in India, inflation has come down. Inflation in America also has come down. So it has taken a pause. Interest rates which were rising very fast. Last year interest rate rose from 0.5% to 4%, almost 350% jump in 1 year. I don't see even 10 or 20% jump this year. So it is the speed, it's stabilized, interest rates have stabilized. Now elections in 2020. So all these factors which were very risky last year have become neutral. Yeah, I would say they have not become positive, but they have become neutral, correct? Now elections in 2024. Next year there is a general elections in America and general elections in India. Both India and America jointly go in elections together once in 25 years. So last time both were in election in year 2000 period, and now it is today. Now, so what happens? Elections, the government of India will spend maximum money for rural economy to pop up their vote shares, correct? So we'll see a lot of spending happening because of the elections in the rural India, and that will it's a different scenario. In the US, the elections, every company will be scared of elections now for next year in US because there is a total deadlock between Democrats and Republicans as regards increasing the debt ceiling, and nobody knows what's going to happen. Eventually, they'll have to approve that limit, but till the time they approve the limit, there'll be a little bit panic, right? There'll be a little bit caution in the market. So, US is a different scenario. India there is a different scenario. Now, what happens if US doesn't improve the increase of that debt ceiling? So, during that period, market will correct 5 to 10%. That can be a very good buying opportunity. Now, it may not happen. Both the parties blink and compromise. If that happens, markets will rally. So we need to watch what's happening in US. But that's the only one thing which one needs to watch. Otherwise, everything is neutral or positive. Then long-term impact of reforms. Let's say GST. The GST collection in last 1 year has gone up by average 18%. Now, even if the inflation is 7%, still net of inflation, the GST collection has gone up by 12%. Now, what it means is the speed at which formalization of Indian economy is happening is improving, correct? It's improving, and the businesses, big businesses are doing well, and economy is showing a path of growth, correct? And this is a good thing. So there is a slowly the GST impact is going to be there for multiple years, but we have just started seeing the positive effect in the short term. That full impact of GST is going to be there for next 3-4 years, which is going to be positive. Now, if you look at the Indian stock market, I have been in Indian stock market for the last 40 years, in 1980. So if you ask me over those 4 decades, 1980 to 90, 1990 to 2000, 2000 to 2010, and 2010 to 2020, which was the slowest decade where returns were less, I would say last 10 years. Last 10 years. In 1980 to 90, the market went up 10 times in 10 years. 1990 to 2000, market went up 4 times. 2000 to 2010, market went up 3 times or 4 times. 2010 till today, market has doubled only once. So, last 10 years, the Indian stock, though index Sensex looks at 60,000, Nifty looks at 18,000, still it has not gone up that much. It has consolidated. And there is a lot of old companies wiped off, new companies have come, business have changed, a lot of turmoil has happened, and consolidation has happened. We have not seen a very good run up to a stock market, which we are used to see from 1980 to 2010. And I think you will see that in next 2-3 years, you will see suddenly a very big spike in Indian stock market. I'm not saying it's going to happen next month. I'm saying in next 2 to 3 years, any in a short span of 3 months, market will spike very well. And I don't know where that will happen. I can't predict the exact date, but in next 3 years, it will happen sometime. Brand India globally has gone up. The momentum of Brand India is gaining more speed. You'll see Indian food, Indian companies, Indian products in every part of the world. And the flow of investments in India has increased tremendously. So I'll tell you, today NRI repatriation, so Indian labor force working abroad sends $100 billion, highest anywhere in the world. 100 billion, no other country. The second is China, which comes at $70 billion. India sends Indian people working abroad, sending money back to India is $100 billion. FDI investments, $100 billion. Portfolio investments, again $50 to $100 billion. Now, in all three, we are number one. Now, FDI investments, China and US were number one, but but they never used to get portfolio investments. China used to get FDI investments. So you see the kind of money which is going to flow in next 1 year or 2 years, a year after that, is going to be very good. So I think rupee might strengthen a little bit, and If rupee strengthens, FFI investments increases the speed in India. Um, so you will see a lot of money coming to India through FDI. I'll give you another example. Everyone knows the company of Colgate Palmolive. Colgate Palmolive came in 1950s to India. That time they brought in FDI. You know how much FDI they bought in? They bought in $10,000. The entire company, Colgate Palmolive, was set up in $10,000 that time. And today, if somebody IKEA one store, they require $1 billion. So you still see the magnitude of FDI which is coming to India. Uh, it's a different scale, different ball game, correct? Now, $10,000, company like Colgate coming and setting up business in India, would it make dent on the Indian economy? No, but they made a lot of profit. They got in very cheap. Now you can't come to India. If Colgate had to come now today and set up the same kind of setup, I don't think they would have required minimum $8 to $10 billion. So India is in a different league today. So you'll see a lot of FDI investments coming, a lot of portfolio investments coming in NRA addition. So this is very good for the market, very good for the stock market and we Indians. Now so what I'm saying is basically the bad we make money. We means investors make money, and it becomes easy for us if you don't put the seeds after the rain comes. You put the seeds before the rain comes, and so those who have done that, thank you very much. You will see the benefit of that in next 2 years. Secondly, building a large portfolio is you have to stay disciplined and process. So let's say when we start constructing a new building and put a first brick, we are very optimistic, correct? And we are very happy and do that. But when the building is halfway construction, you see only plinth and dirt everywhere. And that time you feel it's so dirty, it's useless, correct? You don't see that enthusiasm comes down. For building a portfolio, you keep on investing in SIPs for 1 year, 2 years, 3 years. You don't, but sometimes you say what we are doing, correct? But if you continue doing for 6, 7 years, you see the superstructure and you say, wow. So this is the way. Investing is also a hard way of working, following the process. Now, this was my last slide. I've kept it short this time. I wanted to keep it for some other time. Feel free to ask questions. Let me see if I have any questions, and I appreciate your business and what questions I have. I haven't seen any questions so far. Yeah. I'm sorry, someone has put that there's some background noise here. Yeah. So I'm talking from Hinjewadi, Pune, and there is a Lego event going in my office here. So I'm sitting from a cafe